So a couple of months ago, I made a video about how to invest in Samsung. And by the end of the video, hopefully you guys realize that even though Samsung is not a US-based stock to invest in because it's a Korean-based company, you can still invest into it through an ETF called EWY. And I was pretty sure, I was super confident that that was the only way you can invest into it. But of course I was wrong. Go figure. What's up guys, my name is Darren Jackson. Welcome back to the channel. Hopefully you had an amazing weekend and hopefully your investments shoot up to as high as you can. We can all live rich. And as you guys may know from watching my past couple of videos, including the one I referenced earlier, I love Samsung. It's crazy. I still have my Galaxy Note 5, which at this point I use as nothing but a prop phone because it's probably not worth anything. It takes about a day and a half to charge and lasts for about maybe 15 minutes at this point, so it is what it is. But if Samsung was a US stock I could individually invest in, I would love it forever. I think they are some of the greatest phones, the greatest brand of phones ever, even though I might have said that Apple was my favorite stock of 2020. I didn't really make a big deal out of it. Apple is the best company I've invested in. It's the best stock I've invested in. It's the best dividend paying stock I've invested in. It's the best capital stock I've invested in up until this point. I don't know, whatever, that's not the point. So in this video, we're gonna talk about another stock that you can invest in that will put some of your money into Samsung. And that stock is called KF, or the Korean Fund. Now KF is a mutual fund that invests into the South Korean sector, but it focuses primarily on growth stocks, which I think is really important for another reason that I may get into later, but just definitely keep that in mind. Its largest sector is technology at about 38.5%, and within every stock that it invests into in this mutual fund, its largest holding is in Samsung. I think it invests about 23% of its funds into Samsung, which basically means if you use fractional sharing and you invest $1 into the Korean fund, then about 23 cents of that dollar will technically go towards Samsung. No, well, not technically, it would actually go towards Samsung. So you'd be a very small owner of it, but that's okay. Other good news about KF is besides the fact that it allows you to invest in Samsung if that's something you've been dreaming of doing, just like I have, and maybe EWY wasn't good enough for you. It does pay dividends. From the research that I've seen, it appears that it pays a 63-cent annual dividend. Appears, but I'll get to that in a second. Aside from that, it's also a very positive growing stock within the past couple of years. I think it's grown almost 50% within the past year and maybe a little under 50% in the past 5 years. I think it being a primarily tech ETF or mutual fund in this case has a lot to do with that. But then there are also some issues with this mutual fund that I'm really not too crazy about, and you may feel different. It just depends on what type of stocks you invest into and what purpose they have. Now, the two things I'm not really too crazy about with KF is one, the expense ratio. Now, a mutual fund works the same way as an ETF in the fact that it is a basket full of equities or stocks or whatever. Somebody has to manage that, and it's not us as investors, it's somebody else, it's some other company. Of course, they're going to want to be paid for their hard-earned work in regards to making sure that this stock, in this case, this mutual fund, is doing what it's supposed to do, what its definition is, by investing into the Korean stock market, into primarily growth stocks, primarily into tech stocks. So you have to pay them a fee every single year, which is known as the expense ratio. This is where it gets pretty weird. So the expense ratio for KF is 1.22%, which doesn't seem like a lot, but if you compare it to a lot of other stocks out there or ETFs, that expense ratio is really high. That basically means that if you're like a big baller investor and you just got a lot of money just coming from everywhere, which I hope to get to one day, and you invested $10,000 into this mutual fund, you would be charged $122 per year. Of course, that doesn't really seem like a lot. Like I said in the previous video about EWY, if you put $10,000 on the table and you look away and somebody takes $122, you might not notice it. But again, in comparison to other ETFs and other mutual funds, it's probably gonna be a little expensive. On top of that is something called the PE ratio. Now, of course, the PE ratio isn't the only metric you wanna look into in regards to determining if this is a stock or this is a bond or an ETF that you should be investing into. But it is one of the metrics that's supposedly supposed to tell you if this stock at this current moment is overpriced or if it's underpriced and it's something you should invest into right now. Now, KF has a PE ratio currently at 47, which is pretty high. That could almost mean it's overvalued, or in this case, it's filled with stocks that show a lot of growth potential. I always make the Tesla example, which I'm pretty sure still has a 4-digit PE ratio, but they have a lot of potential, and that's why people invest into it, and that's why the price keeps going up as it is. So that's a couple of things you want to keep a lookout for KF. And now that hopefully answers the question that even though I really, really love these phones, would I invest? Would I personally invest into KF? No, I would not invest into KF. Again, because I'm not investing $10,000 a year, but if I had to choose between that and another ETF, I'm primarily going to look at those expense ratios, and that's going to turn me off completely. Plus, it goes against my mindset of investing in long-term growth and dividend stocks, more so the growth aspect of it, because if I decide to invest more into a stock or an ETF, I'd rather invest into the one that doesn't charge me as much, because then that's money I'm losing instead of money I could have invested back into it or into something else. The other reason is the dividend yield. 63 cents a year doesn't really seem like much. And I know a lot of people, including myself, ideally want to have a stock portfolio that brings them back just as much as they're gonna have to spend on things such as bills. You know, we all want to live off passive income. That's the great thing, right? So if I had to think about it just individually, no, I would not invest in KF. But I want to bring back EWY for just a second. I want to compare the two to see which one is better. If you were forced to pick for one or the other, which one should you pick? So let's talk about that for a little bit. So just to recap, they're both similar types of investments that both track the Korean stock market. EWY tracks large and mid-market cap stocks, and KF tracks growth stocks. In my opinion, that could be small stocks or just any type of stock that has a lot of growth experience, which could be Samsung, or what seems like it is Samsung. Speaking of which, both of their highest sectors are within technology. I think I said KF is at like 38.5%. And EWY is in the 40s. And both of their top stocks, not only within the tech sector, but within all of the sectors that they cover, is Samsung. Like I said, KF covers about 23%, and EWY is a little bit lower at 22%. But here's the thing in regards to that. EWY is a way more expensive stock. It's almost double the price as KF is. KF is about a $44 per share stock, and EWY is 90 something dollars at this point. So when it comes to how much more money you're able to put into Samsung, again, if you're like die hard and that's one of the biggest things you're concerned about, then EWY is gonna be your winner, because again, they both similarly have a percentage into Samsung, but EWY is a lot more of an expensive stock, which could be a turnoff. However, for every share of stock that you buy into EWY, about $23 of that is going to go into Samsung, and with KF, only about $10. Samsung right now, if you convert it from the South Korean won to USD, is about an $80 per share USD stock. So with KF, that's a little over an eighth going into Samsung, and with EWY, that's almost 25%. So if that's something that's really important to you, especially if you know and believe that Samsung is a consistently growing company and they have way more innovations they haven't even covered yet, then that might be something important to you. The other comparison is the dividend yield. Now, I said the dividend yield with KF was at about 63 cents per share per year paid annually, but I said it appears to be. And I said that because I'm pretty sure I only found it on MarketWatch that it paid 63 cents per year. But when I went to websites like dividend.com, I couldn't find any history of any previous payments or any future payments. Actually, it didn't have any information on it at all. Korean fund didn't pop up. Now, EWY, it pays a kind of a weird range. Now, every other year, it appears to fluctuate up and down. So you may have one year where it pays under $1 every single year in dividends, and another year it pays over $1 every single year in dividends. But the thing with EWY is that it's consistent. And I was able to find that information on dividend.com and MarketWatch and stuff like that. So when it comes to the dividends, they both pay annually, supposedly with KF, but definitely with EWY. So I think it wins on that aspect as well. And then comes the expense ratio. So I hate the expense ratio for both because they're both pretty high, especially when you compare them to other ETFs and stuff like that. EWY has a 56 or 0.56% expense ratio, which means you would be spending $56 every single year if you invested $10,000 into it. But again, against 1.22%, which is almost double, you're spending $122 every single year for $10,000 invested a year. Hands down, I would go with EWI. There's really don't really even have to think about it. The other thing I mentioned with KF is the PE ratio. I said it was at 47. The PE ratio with EWI is at 26, which essentially means that all these companies that make up this entire ETF are fairly undervalued, even when it comes to considering Samsung, which makes up almost a quarter of this entire EWI bubble, I guess. Couldn't really think of any other word. So when it comes to that, having a lower PE ratio gives you the belief, hopefully you've done the additional research, but it gives you the belief that these are very cheap or discounted equities or investments that you're making at the time. So it appears that EWI is the cheaper stock to invest into that will give you the most growth. Speaking of growth, that's the only aspect of these two companies or investments that are really close. They both appear to have about a 50% growth over the past year, and I believe the same thing all time. You can't really compare those two, but with all that information, it's obviously safe to say that if I had to invest in either one, or if somebody asked me which one would you rather invest into or which one I should invest into, I would definitely say you should look more in the EWI as opposed to KF, because at the end of the day, you have more money going into a high growing stock that will ultimately put more money into Samsung if you truly love it. You for sure have money coming back in the form of dividends, even though it's every year, and even though it does fluctuate, it appears that those numbers regardless are at least higher than the 63 cents that I found with KF. You're also getting charged less every single year for expense ratios, which is really important if you're investing a whole lot of money into it, and the PE ratio for the time being is a lot lower. But again, there's other things you have to look for, like the price to bookings ratio and other stuff like that. But it appears that EWI is the champion for investing in the Samsung. Even though I'm not going to invest in either one, KF does a really good job in making EWI look like a boss. But let me know what you guys think about that. Hopefully this was as informative and slightly entertaining as I possibly could have made it. But let me know, have you guys looked into KF? Was this a stock that you had any idea about? Would you invest into either one of these, or are you investing into either one of these? And maybe I missed out on another company that can also allow you to invest in Samsung. So if I am, please leave a comment below and let me know what that is, because I'm not gonna sit here and say these are the only two and be wrong again. But as far as I know, these are the only two. But I appreciate you guys watching. Make sure you also watch some of these other videos, which I hope help you on your investing journey as they have in mind. Thank you so much for spending your time with me today. And until next time, take care.